May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the US dollar CAD, the USD CAD. All right, the Canadian dollar. Well. It looks like there may be an opportunity to take advantage of the fact that the US dollar may outperform the Canadian dollar. Okay, let's look. We're on the weekly, right? First thing I like to check is what last week's candle looks like. How did it close? Well, let's take a closer look. You can see that the candle was bearish candle. We had a bearish uh excuse me. I'm not feeling very well. Just trying to get through this. Bear with me if you would. Thank you very much. Now, uh excuse that sniffing sound. It can sound kind of crazy when I hear other creators do it. It drives me nuts. Anyway, all right. So you have a bearish close on the week, right? That the key is that it closed within the range of the previous week. You know what that means if you follow my channel, right? Using candlestick logic, right? If the current candle closes within the range, top to bottom, of the previous candle, that means two things. One, it indicates that price may consolidate. All right. We may see some consolidation because it closed back within the range. All right. The high and low of the previous candle. Also, it could also mean that we have the potential for continuation of the bulls defending from the bears. The bears pushed price down and the bulls came back in, pushing price back up below. I mean, above the low of the previous week and into back into this top and bottom range, right? So we may see some continuation. Both of those have bullish signals to it. All right. Doesn't mean that we're going to see, we should start jumping in buys. That doesn't mean that. But because price is respecting the 50% of the 2 weeks ago, the candle from 2 weeks ago, we didn't see a close below that 50%, may indicate that this rejection area is pretty strong. Okay. And that we may see the market move up higher. Okay. Now, let's get out of this. Remember what I just said. Okay. So, all right. The other thing is we've been making higher highs, higher highs, right? And we finally broke through a couple of weeks ago from this trend, if you will. I don't trade trend lines, so don't get crazy. I'm just marking structure. So once price broke below this low, you can see there was a buy up and then a sell off, a stronger sell off. And price created this balanced price range here where we gap up and then gap back through that gap. All right. This has more bearish indications than bullish. And you can see that we have a big what do you call it? A big fair value gap, bearish fair value gap here. If I can just do it. All right. Got the wrong name for this. All right. So we have a bearish fair value gap and price has not mitigated, did not close, did not tap into that fair value gap as of yet. All right. This is going to be a draw on liquidity. There is no doubt about that. All right. It could draw price higher. All right. Because it has been unmitigated. This wick has already been traded into the range of this wick. And here we are closing up higher than the previous week, uh, the previous weekly low. So I'm looking at this and saying, we have to watch for reactions. We got to see how sensitive price is to some POIs that we're going to look at. All right. So let's look at the daily. You can see there was a buy up here where price overlapped the sell, the two sell candles. We had a strong up there. So price comes back to this bullish order block, mitigated, and it brought price higher. That's one angle. All right. Price pushed up, pulled back, and then higher, and then we dropped. All right. Why did it drop? We have these buy the sells over here, buy the sell candle wicks and all. On the lower time frame, you're going to see that this was an area of this is an area of fair value. It's an area of supply, and you can see the overall large area of supply that price came back into, mitigated it, and dropped from there. Now, I also want you to see the nature of the way it dropped. Look at that. That's a bearish fair value gap again. All right. And I'm going to mark it out. All right. That price pushed its way back into. All right. I love this. I would have much rather have seen price give me a two candle in and out. But that's not what happened. Price pushed up, closed within the range of the previous candle. Price pushed up, closed within the range of the previous candle. So this looks corrective, if you ask me. This looks impulsive. So it looks like because it came back up to these two buy candles and then the strongest sell-off we've created another order block. That's what that golden line is for. And that's where price is being held. It looks like price is respecting that array, that PD array, the discount array. We come back up into 50% with this push in here of the range. Look, from the high to the low, right? Let's move this all the way out. Put on what do you got? Yeah, let's do OT. All right. And you can see price came up above the 50% line right here. All right. This is premium prices. This is discount prices. You want to take your shorts from premium. You want to take your longs from discount. If you would have took the short from premium, you would have been great. All right. Price comes back up into the fair value gap as it displaces through the order block. All right. Which validates the order block for me. All right. And we could see price turn over here for lower prices. And that's what I'll be looking for, honestly. I'll be looking for that, but I won't anticipate it. All right. I won't anticipate it because price could very well be drawn to the larger daily fair value gap. I mean, the weekly fair value gap up here before it turns over. All right. So you got to be careful of this. You see how it protected this low? It could find its way up higher and then make the move down. All right. To sweep the sell side liquidity. That is the possibility. That is the bullish scenario. It's a short term move, and we would, if it so happens, price could give us an indication here. This is what I would be looking for. All right, we have to see this this order block fail. This order block has to fail in order for that scenario to happen. And I wouldn't take a trade until that happens. If I see price pushing up higher in an impulsive way towards this protected high, I would wait until price reaches up here, and that's when I would be looking for a high, a higher high, a higher high, and then a lower high relative to that low, a lower low, excuse me, and then I'll wait for price to pull back up into this bearish impulsive leg for a high probability trade to the downside. That's what I'd be looking for there. Got it? That is the bullish scenario. You understand? Even though it's I'm not going to buy to sell. I'm going to wait until price gets up here, and then I'll sell, because this bearish leg creating going through this low here, creating this area of fair value, all right, or you could call it supply, all right, creating this supply, I'm bearish. That's my bias. All right. Now, if the market does not respect this bearish order block here, then I'd start looking for bullish scenarios. All right, I would start to look for bullish scenarios, uh, uh, but not so quick, not so quick. I'm getting ahead of myself. I would look for bullish scenarios until it breaks that high. Period. All right, I would look for bullish scenarios. I would not taking buys in the US dollar CAD until this high is broken. All right, until I see a failure of this weekly fair value gap. That's when I would start looking for buys. Right now, there's a couple of ways, a couple of areas I'm looking for sells. I just gave you the first one from here, right? So I gave you the first one from here, right? If this order block fails, I'm looking for this order block to to hold, and I'm looking for a high, a higher high, a lower low relative to that low, and then a pullback. And I'd be looking for it from right here. That's what I'll be looking for on the lower time frames. All right, the 15 minute, the 15 minute. That's what I'll be looking for. Now, if we go down to the 4 hour, okay. If we go down to the 4 hour, you can see it very clearly. The structure that I'm looking for. All right, this looks corrective. This looks impulsive, doesn't it? Doesn't it? All right, there's a good reason for that. So as uh, as it's correcting up in here, I'm looking for price to possibly sweep these highs back into this this area of supply here. Watch this. Watch it. Watch it. Watch it. Watch. What am I looking for? Okay, right here. Right here. Price could come right up here. Use this as inducement. Pop in here. Give me my pattern, and I'm taking it downtown. That's what I would want. That would give me I would take it. I would take this trade with a lot of confidence. Yes, I would. But it has to form. Give me my buy model, and I'm in it. If this fails, if this fails, and price takes out this high, then we're going to the bigger picture, right? Here, the weekly fair value gap, using these highs as inducement for mitigation, and then I'll be looking for a price to give me the sell model there. Matter of fact, come on, man. Why does it do that to me? All right, I'll be looking for the same situation up here and taking it down to downtown, right? All right, so you got it. You see where I'm at on the US dollar CAD. All right, there may be some short term bullishness. We're going to watch the way the market treats these the order blocks here. All right, and see if it responds to the supply zones. If not, we'll wait till it gets up to this fair value gap. When it takes that high and this high, and we'll see. We'll look for the um, the cell models to form at both these areas. I'll be looking here first, and then I'll be looking here second if the bearish order block here fails. All right. I put out a few videos already yesterday for the pound USD, the euro USD, and the US dollar index. All right. Go check those out. Tell me what you think. Leave a comment. Help my channel to grow with those comments, and I would appreciate that. And I will see you in the next video. Thank you very much. May profits be upon you.